Welcome to the Valareso Capital community, where we discuss the stock market and trading strategies to become a consistently profitable trader and investor. Hey traders, welcome back to Valareso Capital. On today's episode, we're going to go through the weekly watch list and we're also going to take a look at the market update. We had a pretty volatile week, and last week we were looking for a possible move to the downside, right? Remember that we were talking about bears being back into the market. We talk about that, those levels of the anchor VWAP being broken, and we're gonna cover what was actually the result of the expectation that we had last week. So if you haven't watched last week's video, I recommended that you do. That way you can understand what was the hypothesis that we built based on the evidence that we had from the market at that time, and that evidence was based solely on price action, which is actually pretty important to do because price action most of the times already has all the information that you need to make some really accurate predictions in the market, and not actually predictions but more of hypotheses that then you're going to be able to test via the positions that you take to trade the market in that direction. So let's start right here with the market. We're gonna go through the SPX first, and I want to cover a couple of things, right? A lot of people, and it's funny, the market is so interesting, right? I just find it fascinating how the thing that actually changes sentiment is price. There's nothing else that changes sentiment so fast as price action, right? A lot of people has had these macro theories about bull or bearish, and it's so funny because a lot of those people, they tend, not everyone, but they tend to change it. They tend to change their perspectives and everything based on a couple of different reactions that we had in the price. So I find it pretty interesting to see that a lot of people was pretty bullish this day right here, right? If we go back to the SPX, a lot of people were talking about going to new all-time highs in the SPX, in the QQQs, talking about this being just a shakeout and everything. And it's so funny because the thing about the market is that you don't need to predict anything, right? You don't need to be a bull, you don't need to be a bear, right? Being bullish right here makes no sense because the price is below a 21 exponential moving average wave. Being bearish at this moment doesn't make sense because price is above a 21 exponential moving average wave. And being bullish right here doesn't make sense because price is below a 21 exponential moving average wave. So it's actually really easy just to focus on the path of least resistance using something so easy and something so simple as the 21 exponential moving average wave, right? If you just follow the 21 exponential moving average wave, yeah, sometimes you're going to be catch off guard. Sometimes that happens, but most of the times you're going to be able to position yourself in the path of this resistance, and you don't need to watch the news. You don't even need to listen to what Powell is saying about the interest rates. You don't need any of that because whatever happens, trust me, whatever happens, price is going to trend in the direction of that 21 exponential moving average wave. And you're going to be able to position yourself in the path of this resistance. So it's actually that easy, in my opinion. And that's what I have found to be working with me. So enough of that, and let's talk about what we could expect for next week. So first of all, let's take a look at some of the breadth indicators that I have here in the Nasdaq composite and also on the NYSE composite. So right here you can see that, right, I have a lot of people watch these. These are the summation index, right? So basically, just in summary, if you're not familiar with these breadth indicators, basically if you have a cross below that 10 exponential moving average wave, which is represented by the gray line here in the charts, basically you have more pressure to the downside. Let's just keep it pretty simple. And these tend to give really good buys and sell signals. And what we have right now, we continue to have selling pressure in the market. So there's no evidence for a bottom, right? There's no evidence of a bottom. The only evidence that I'm seeing of a potential snapback rally, which will most likely take the SPX back to the 21 exponential moving average wave, is that we are starting to get to these oversold levels right here in both the Nasdaq composite and also the NYSE composite. So that's the only thing. If you're short, you're on the right side. Pretty simple. You are on the right side of the market. But just remember that when we tend to get really oversold, the short covering can happen really fast. And it's not that, oh my god, be careful, short covering is gonna be crazy. No, don't listen to that people that are scared of shorting. You don't need to be scared of shorting. Shorting is pretty similar. It just tends to happen faster, both directions, to the downside and also to the upside because of the short covering. So just be aware of this. I think that you are in the path of least resistance, which is good, but just remember that we're starting to see a little bit of oversold measurements here in both of the composites that I watch. And that basically just means have a tight stop, manage risk. That's it. You don't need to be scared or anything like that. So now that we have that into context, let's take a look at the price action. There's one very, very important level that I'm watching on the SPX, and that's going to be 4,300. We tend to see a lot of pause around these psychological levels in the SPX. So I think it's really important for us to watch those levels, right? Levels like 4,500, 4,400. And right now we're starting to go to 4,300. And it's really important for us to be aware of these numbers because we tend to see snapback rallies back into the 21 exponential moving average wave. And also, if you use the Kellner channels for your price analysis, which I do, and the Kellner channels are basically just these lines that I have right here, right? Basically, they just measure the distance using ATR, average true ranges, from the 21 exponential moving average wave. That's the way that I have the settings on. So basically, what I'm trying to say here is that every time we get really extended to that -3 ATR of those Kellner channels, we tend to see some snapback rallies back into that 21 exponential moving average wave, and we're starting to go into that level right now. And let me show you some more evidence about that, so you can see some other proofs. Right here in this sell-off, you can see that we also got to that 3 ATR to the downside, and then we had a snapback rally all the way back to that 21 exponential moving average wave. So the thing is pretty simple. Bears are in control, but we're starting to reach some really extended levels to the downside. And when we do that, we tend to see short covering rallies that are pretty aggressive. And the good thing is that they will give us another opportunity to open new short or bearish positions in the market. So that's actually going to be pretty good. So basically, just what is going to be the hypothesis that we're going to build for next week is pretty simple. Bears are in control, but the market is starting to get extended. So that means patience. If you don't have any short positions, wait. Just be patient. It makes no sense to start opening positions around these levels because most likely we're going to see that snapback rally all the way back to that 21 exponential moving average wave. And of course, we might not, but we just have to think in probabilities. So let's just keep it pretty simple. So that's going to be it for the SPX. I don't think we need to look at anything else. If we take a look at the Qs are going to look pretty similar, right? You can see that the Qs are also around that 3 ATR to the downside, meaning that we might see that snapback rally in the indexes, which is basically what we cover in the SPX. Let's take a look at the mega caps here, because I think that it's actually pretty interesting to see what is happening with the mega caps, because most of the mega caps are starting to form some downtrends. You can see right here, Amazon already below all key moving averages. We have Netflix, which is below all key moving averages. We have Google, which is holding that 50, but below that 21 exponential moving average wave. We have Tesla, which just broke that 21 exponential moving average wave. We have Microsoft, which is also below that 21 exponential moving average wave. So basically what I'm trying to say here is that a lot of people, I don't know what we have built this kind of hate around the market being super overweighted with the mega caps. Is the market that we have. The market that we have is a market that is heavily weighted. Is a heavily weighted market in some of these mega caps, and we have to accept that. And the reality is that the market is not gonna change direction until we start to see some basing in these mega caps. It's actually pretty simple. So watching the mega caps gives you an edge, and a lot of people they don't see that it's actually pretty easy to get a really good sense of the market by watching the mega caps. they give you a lot of information, and especially if you trade the indexes, right? If you trade the indexes like I do, I trade the SPY, the Qs. Watching the mega caps gives you an amazing edge. So as long as these mega caps continue to be on downtrends, the path of least resistance continue to be to the downside, and that's going to be pretty simple that's a pretty simple evidence that we're seeing right now in the market. So now that we have that understanding, and just to give a summary, path of least resistance is to the downside, but we are starting to get to oversold levels. That's it. Now, in terms of the watch list, it's gonna be tricky. I do have some names, but it's gonna be tricky because the thing is that I wouldn't open new shorts here, but a lot of names, if we get some bounces, are gonna be amazing shorts, right? But for now, I don't have any shorts, I don't have any high probability shorts at these levels. I just don't. So I'm not gonna give you that. If you wanna play against the trend, which is something I don't recommend, gonna share some names that I think that are holding, and maybe you can just add these names to your watch list and just track them, and then if you get more evidence of the market bottoming, then probably you can execute on these names. And these names are gonna be pretty simple. I do have a mega cap, and that's gonna be Meta, and it's interesting to see Meta, right? But even though Meta is holding that 21 exponential moving average wave, we continue to get rejected at that 50 daily moving average, and that 50 daily moving average is starting to slope to the downside, which is not the most bullish thing ever. But if we happen to see some bouncing action in the SPX, and all of a sudden Meta pops here, then any pullbacks are going to be opportunities to buy Meta and on a change of direction. I don't think that you have to execute it right now, but you can wait for a little bit more evidence for that one. Then let me show you Spotify, which is also interesting, right? I think it's really important for us to be aware of what is the anchor VWAP from the previous earnings, because that gives you a lot of feeling of who is winning this battle between bulls and bears. And right now, as long as Spotify continues to be above the anchor VWAP from those earnings, whatever action or news that we have there, we don't need to know how many users they have. We don't need to know what new things are they bringing to the platform. We don't need to know who's putting on a new song. We don't need to know any of that. The only thing we need to know is that whatever happens there, who is winning the battle? Bulls are winning the battle. Bulls are winning the battle. So any part of this resistance continues to be to the upside. And as long as Spotify holds also that 50 daily moving average, any pullback into that level is going to be viable. Just remember that the path of least resistance in the indexes is to the downside, so the probability of Spotify working is lower. So we just have to be really aware of that. And then I think that you can check the other names, right? I have PDD. Let's take a look at PDD really quickly here, because it's interesting to see PDD holding these earnings gap, right? We continue to trade in a box. Kind of difficult to see where PDD is going. Remember, if we take a look at the anchor VWAPs from earnings, we continue to be below that level, right? And as long as we're below that level, whoever's winning that battle continues to be the bears. So don't be surprised if you continue to see more consolidation around here. But an interesting name to have on your watch list. And then you can take a look at CRWD, and also you can take a look at Affirm Holdings, FRM. You can take a look at that one. I think it's interesting as well. But other than that, guys, I don't think we have much, right? A couple of bearish setups. I do have Zoom rejected at the 21 exponential moving average wave, but any snapback rally, probably Zoom is also going to rally a little bit, but this one looks interesting if you want to trade something to the downside. And I do have also on, right, which is also below the 21 exponential moving average wave. If we get a snapback rally to this level, then perhaps you can trade it to the downside. This one is also looking interesting, but those are going to be the names that I have. I'm not looking to do anything until we get some real interesting bouncing action in the SPX. I want to be sure that I'm not going to be falling into FOMO and trying to trade these various setups when the indexes are really extended. So patience is going to be key. and we just have to wait for it, right? Remember that in trading, waiting is actually working, right? When you're just prepared and you're waiting, you're actually working, and that's something really interesting to understand, and something really important to understand to reframe the way you think, and that way you're gonna be more successful in trading. So that's gonna be it for the video, guys. I hope that you have an amazing weekend, and I will see you on future videos. Take care, and bye bye.